Let's begin with the markets. That call by Paul Tudor Jones today. The famed investor speaking exclusively to CNBC and saying the rally looks far from over, even if interest rates continue to go up.
If you go look at what has shut off the stock market historically, it's been real rates on the front end of something in the neighborhood of 200, 250 basis points. We're negative right now. So when you've got a lot of tech companies growing at 20% per year, who cares about 100 basis points? Who cares, right? So I think you'll see rates go up and stocks go up in tandem at the end of the year. I can see things getting crazy, particularly at year end after the midterm elections. I can see them getting crazy to the upside.
All right, that's Paul Tudor Jones. You rarely hear from him, Pete, but you certainly did today, and he made quite a splash.
Yeah, and don't you love hearing him say they could get crazy? Obviously, he means that in a good way, right? I mean, he's talking about technology stocks, and you know, I think the one thing that's being lost a little bit at times is how impressive retail's been on top of all the rest of this. We talk about energy, we talk about financials, we talk about all this stuff, and retail continues to be strong, including today. And obviously, we got some good earnings last night, but. Yeah, I think technology, we've talked about it time and time again. It's not defensive. It's where you go because you've got growth and you've got great. Overall, I see incredible management. I see that growth side of it, Scott. And you look at the fundamental story, many of the names still continue to be very inexpensive, and they're returning back to shareholders.
Yeah, John, I mean, after the midterm elections, I could see them get crazy, speaking of stocks to the upside. I'm not necessarily sure he thinks everything's going to end well, even if they do that. He did mention 1987. And 1999.
Sure.
And we know what happened in those instances.
None of us know where, including
he
Paul
did
Tudor
preface
Jones.
it by saying, I'm not saying there's going to be a crash.
Right.
But you got the feeling that he thought things could get really exuberant, and then all bets might be off after that.
Right. And reading through it, Judge, you probably would say that there could be some nervousness into the election, and perhaps people lighten up too much, aren't participating enough in the market. And then after the election, the chase into the end of the year. I don't know that that's a lot different than what we said. Obviously, Paul Tudor Jones' words carry a lot more weight, certainly, than mine. But I think he's right. I think Mr. Jones has a track record of calling things very well. And I think that right now, things are certainly looking better than they were just 3 months ago, Judge, and obviously much better than the end of January, beginning of February.
Steph, the big part of that call is the who cares about 100 basis points.
Yeah.
I mean, we've talked about rates, and Pete's talked about the velocity of the move. We're trying to gauge what level would unsettle the market. Is he right? Who cares about 100 basis points higher?
Well, I think it depends on what your perspective is on growth. If you think growth is actually accelerating, which John just alluded to.
Let's say even if we think they're going up for the right reason, because I know that's where you guys are going to go.
Well, but that's really important. I mean, if we're going to go from 2.2% GDP in the first quarter to almost 4% in the second, and maybe 3% in the back half of the year, I'm kind of thinking around 3% for the full year with tame inflation. Look at those CPI numbers today. Pretty tame, pretty in line. PCE numbers are at 1.8, 1.9 kind of thing. So the Fed doesn't really have a lot of ammunition to go a lot more than what most people are expecting. All of this translates into double-digit earnings growth. And I know you're going to ask me, well, what about next year? It's going to roll off.
No,
well,
I'm
guess
not.
what? It is going to roll off, but it's not going to roll off as much as people think it's going.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.